What does financial freedom mean to you? Well, for some folks, it is exiting the time and effort economy and entering into the results economy. You've exited the time and effort economy when your money is making money for you. And there's a very intelligent man named Robert Kiyosaki who has been prolific in his production of personal finance books, and I read Rich Dad, Poor Dad, I think when I was maybe a freshman in college, so like 17, 18 years old, and it spoke to me because I identified. In the book, he talks about his own father wanted him to go and get a really good, high-paying job. And his friend's father wanted him and his friend to learn the value of investing as a means of producing an income. And one of the tools that comes out of that book is this cash flow quadrant. And you can see here on the left side, you have employees and the self-employed. And on the right side, you have business owners and investors. On the left side, people are earning income. And on the right side, the income comes to them passively. Kiyosaki asserts that you really want to be on the right side of this quadrant, either business owner or an investor. That's how you really get ahead financially. It's not to say that if you're an employee that you can't be successful financially. It just means that maybe if you are an employee, your strategy then to get into the passive income game is to be really diligent about saving in your 401k, potentially even more savings on top of what you put in your 401k so that your portfolio can start producing income for you. You know, you can be a business owner and have 100% ownership of your business or 50% or 10%. And ideally, equity that you have in that business pays you regardless whether or not you show up to the office or not, because you're an owner, right? You get to participate in the profits. That's how investing works too, right? You're buying a stock, which is a share. So you're purchasing this promise that there will be some future profit. It's not always the case. It's a risk and reward game, right? So you play and you get rewarded if the company follows through on their promise. When it works well, and over time it tends to, and if you're invested for many, 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 many years, overall the stock market will return a rate of return that's going to be sufficient for you to reach your financial goals. Well, like I said, if you're self-employed or you're an employee, you want to get out of the trap of needing to convert your time and energy for an income. So the portfolio provides you a venue to do that. An investor might also invest in something like real estate, where the recurrent income then is rental income. Investor in this quadrant is broad. It doesn't necessarily have to be a stock market portfolio, but in my experience, if you are an employee or a self-employed person, it's potentially the more efficient means of getting to the right side of the cash flow quadrant.